Budget speech 2023. What are the implications for us as investors? What is the economic outlook looking like in South Africa and in the property economy in general? If this is your first time joining for a market update, welcome. If you're a returning visitor, thanks for being here. Today, we're going to talk about four main things that are affecting and contributing to the property market. So first of all, we're going to look at some macroeconomics, what's happening in the global picture. We're going to look at some of the US stock performances from last year, as well as where the housing market is going. And we tend to follow the US because they kind of are the front runner when it comes to all things economics. So if we can understand what's going on in their sort of outlook, it'll have an impact here on South Africa. The three main risks of investing in South Africa, what the 2023 budget implications would be for property investors, and then we'll end off with some property trends. You know, what's been happening in the month of March. So again, if this is your first time, click that subscribe button, join the tribe. If you like this vibe, let's jump in. So first of all, the macroeconomic picture. And what's important is us as South Africans investing in the South African property market. You might think, you know, we don't need to know what's happening in the US. We don't need to know what's happening with the war in Ukraine and Russia. But all of those macroeconomic factors have an impact on us. For example, if the Ukraine war continues to escalate, there might be a more of a fuel shortage, which then drives inflation up, which drives interest rates up, which then drives our bond repayments up. So the first stat that I wanted to share with you is around, how tough a year 2022 was. And here we're starting to see the wipeout of not only the stock market, which I'll get to next, but the housing market. And here you can see that we had the biggest wipeout in wealth since the financial crisis of 2008. So we saw almost a 5% decline in the value of US homes by 2.3 trillion. So it was a tough year. It was a tough year to be an investor in 2022. Now, if we look at the stock market also had its ups and its downs. Here are some of the top winners from 2022. So we've got our five industries: energy, medical distribution, insurance, aerospace, defense, and drug manufacturers. And then we have our individual top winners, the top performing companies in each one of these industries. So ExxonMobil, McKesson, I hope I said that right, maybe I didn't, Progressive, Northrop Grumman, and then the other one is covered by my tile. But those are some of the good performing stocks from the year 2022. But if we look at the S&P 500, which is, it's an index on the US stock exchange and gives you a bit of a feel of how the year did in general, you can see it was down 19.4%. So guys, 2022 was a very tough year to be an investor. The housing market went down, the stock market went down, Bitcoin and crypto crashed. I don't necessarily think things are going to get much easier this year, but we are going to see a recovery. Some of the biggest losers: Coinbase lost 86%, Meta, also Facebook. Meta is just a new name for Facebook, 64%, Digital Realty, Blackstone, and then Rivian, the auto car manufacturer. So you can see the top five losers and the five winners. But if we look at the stock market as a whole, now this slide, I know it looks hella intimidating, but basically this is just giving you a sense of how the whole stock market did in one slide. So if we look on the top left, this one bar here that's designated with a 1, this is all the technology companies on the US stock exchange. And the size of the company, so here you can see Apple, that size tells you how big a contributor it is to the technology industry. So, Apple is the biggest player when it comes to tech, based on market size. Apple lost 26% in value, in stock value. So if you bought 100 Rand worth of Apple stock in the beginning of the year, and at the end of the year, that value of that 100 Rand would be 74 Rand. Microsoft lost 28%. Technology got hit, and you can see by the number of reds and then the intensity. Obviously, the brighter the red, the more that was lost by that company. Number two, we've got communication services. Here's Google, Meta, all of that stuff. We've got our auto manufacturers. So we had some really tough performing industries. The ones that did well was energy. You can see here on the right, that was the number one in terms of the green. You can see a lot of good performance there. Healthcare did pretty well. Insurance, and then aerospace and defense. So again, I think we've got a tough economic climate globally. The war in Ukraine and Russia is obviously not helping things, and everyone's feeling the pinch. The other thing that we are still contending with is rising inflation. Now, based on the data and the news and sort of the sentiment, is that inflation is starting to come down. We're starting to peak, and that's what the IMF has updated us on in January 2023. So what does that mean? That means that we're likely not going to see that much aggressive rate hiking from the Reserve Bank, assuming that South Africa, we can also keep our inflation under control. But we should be heading into the end of the rising cycle and start moving into, hopefully plateauing just at this 10.75 as the prime interest rate. Inflation has been a key talking point for many of my market updates. This is the summary of how inflation hit the US economy. And again, I'm using the US economy because this data is available there. This isn't really as readily available in South Africa. But you can see on the right here that food went up roughly 10%. So 100 Rand is not going to buy you 100 Rand worth of food that it did in the beginning of the year. Now you need 110 Rand to buy that same 100 Rand basket. Energy went up 13%, which has been really probably the toughest bite for us all to take is this energy cost. And then on the left here, you can see some specific items. So fuel, eggs, airlines, butter, bread, rice, fats, public transport, all of the stuff went up except for beef and smartphones. So time to buy that smartphone that's super expensive. Maybe now's the time because it's gone down. But otherwise, guys, we're in inflationary times where things are getting more and more expensive. And the only option that central banks have is to increase interest rates to try and reduce the amount of growth. The last slide that I have for this macroeconomic picture is the growth projections. And again, this is from the World Bank. So we're seeing on the left-hand side that we're estimating that the world is going to have a real GDP. Now, real GDP means above inflation of 3.4% in 2022, 2.9% in 2023, and then 3.1% in 2024. For the sub-Saharan Africa, which is obviously where South Africa resides, here at the bottom, you can see that we're going for 3.8, 3.8, 4.1. Now, that's not for South Africa specifically. Our expectation is a lot lower because of load shedding. But there seems to be some decent growth in the Middle East, Central Asia, and then emerging and developing Asia. And then in sub-Saharan Africa, I think there's great growth. I just don't know if South Africa is going to participate in that just because of some of the domestic challenges that we have. So a couple days ago, our finance minister gave the budget speech of 2023. I think it was a tough speech to give, and I think he did pretty well. I think he did as all analysts expected and spoke about. I don't think the challenges are hard to see in South Africa. I think everybody's aware of it. As a very high-level summary, this is what you need to know. These are the highlights of that speech. So first of all, there is a nice introduction of a solar tax benefit. So if you as an individual want to buy solar, the government is willing to give you a tax rebate up to 25% of your spend, maxing out at 15,000 Rand. So you can buy up to 60,000 Rand worth of solar and you'll get 15,000 Rand back from the government. I think it's a pretty good initiative, and that leads me to think we're looking to privatize some of the energy generation in this country, which is long overdue. But I think where they're missing out is that the batteries is the highest cost element to going off the grid. So yes, solar is a good start, but I would have liked to see a battery initiative as well. Then there has been a 4.9% personal income tax relief. So these are the new scales that you need to be aware of, and this is just basically going up with inflation. So SARS has just said, we're gonna tax you based on inflation adjusted revenue instead of just normal revenue. Then there is a 10% increase in tax-free lump sums from retirement funds. So that's a nice, again, tax-free initiative that you can get involved in. And then transfer duty as property investors. This is important for us because when we buy a property, we have to pay SARS the transfer duty to have that transfer happen. And that has been increased by 10%. What that means is any purchase under 1.1 million attracts zero transfer duties. Last year it was 1 million, now it's 1.1. So any sale under 1.1, no transfer duties payable. Some of the stuff that's remained unchanged, the interest exemption, the estate duties, and then capital gains tax, you can still see that individuals are 18%, companies 21%, and other trusts 36%. In terms of our budget framework, this is how ours looks. So we have on the left-hand side the revenue collected by SARS last year. So 1.9 trillion rand was collected by SARS, which is 28% of our total GDP. Then we've got expenditure. So we've got income. The government has income of 1.9 trillion coming in, but they've got expenses, outflowing capital of 2.24 trillion rand. So 32% of our GDP is just our expenditure, which means we're in a budget deficit. Basically, we're spending more than we're making as a country. And a company cannot survive very long if its expenses outweigh its income for an extended period of time. Same thing happening with South Africa, guys. We've got a lot of revenue being collected, and we had a really good tax revenue collection. You must see the news articles that Kees Wedder, the CEO of SARS, there's been a great compliance drive. We've collected a lot of revenue, but we're still spending more than we're making, leaving us with a budget deficit, meaning we owe and we have to get debt to cover that. And our debt service cost, which is all the way to the right-hand side, is 340 billion rand. So just to cover the debt every year, we're spending 340 billion rand. So, I'm not an expert when it comes to these kind of budget frameworks. But if I just think of simple business sense, if you're spending more than you're earning, we're going to have a problem at some point. Now, this is a very interesting slide for me. This shows you how our government spends 100 rand. And you can see that right at the top, 15 rand of every 100 rand the government spends goes to debt, goes to just servicing that debt. Now, the debt, why are we getting into all this debt? Well, we've got failing state-owned entities like Transnet and Eskom and all of these that are, gaining huge amounts of debt that they cannot pay off. Eskom is unable to pay its debts. The government takes on its debt, right? So it takes the debt from this failing entity, and then we as taxpayers end up having to foot the bill. So, that's not great. You don't want to be spending so much of your money on debt. You want that money to be going to education or to infrastructure or to investments that are going to grow job opportunities. Anyway, the second one is basic education. Then we've got social protection, etc. You can go on to various news articles to see all of this. But I just wanted to show how big our debt situation is in South Africa. I think our debt is at 70% of our GDP. Which is very high. That's one of the big risks facing South Africa today. Okay, let's look at some of the other risks that are in South Africa. So if you're an investor already invested in South Africa, this is important to know. If you're somebody outside South Africa or new to the property game, it's good that you know what the risks are. Now, risks are in every country. Let me start off by saying that. We've got risks in Ukraine and Russia that are huge. We've got risks in Europe because of the proximity to that war. So it's not like South Africa is this gloom and doom, really terrible place. It's got its own challenges as every other country does, but it also has great yield. So as much as I'm going to paint a picture that might seem a little bit scary, I'm still putting money into property deals. I'm still very bullish on the property sector. The low-income market in South Africa is phenomenal. The demand is fantastic. Student accommodation is growing rapidly. So there's lots of opportunity. But let's talk about the risk. The first one, Eskom intelligence files. I think this is going to be a very interesting chapter. Andre de Ruyter a couple of days ago had a pretty explosive interview with a news broadcaster at ENCA, I think. And basically he just said that there are some people very high up in ANC that are involved in the corruption and in the sabotage that's happening with Eskom, and that there are essentially 4 crime cartels in Mpumalanga that are just, stealing like R1 billion per month from Eskom, which is just crazy. I think it's great that he's brought this to light. I'm curious to see how it develops. Is this going to be just another story that kind of disappears and nothing really changes, or is this the wake up call that President Ramaphosa has been looking for to try and really fight corruption? Well, here we go. Another not so great news article that was recently released is that South Africa has been grey listed by the FATF. Now, this is an anti-money laundering watchdog, and essentially they've said to us that we failed on certain criteria. I think it's 15 of the 62 items that they need. We have failed on, and as thus, our rating or our attractiveness to an international market goes down. So what does this mean? It just means that South Africa is not as attractive for international investment, meaning that businesses are going to have to jump through a few more hoops to get funding from international sources. So not great. I think we can. It's good that we've been grey listed because it's highlighted what we need to do to become less risky for money laundering. So hopefully, we can make some inroads there. I think the third and very scary risk in South Africa is I think we're on a very thin edge when it comes to social unrest. I just think that there are so many unemployed people, and it's just getting too much now. There's increased electricity, increased rent, everything is going up, jobs are going down. It's just, and I think that there are obviously big discussions happening within the news articles, as you can see here, that there is growing inequality, political instability, and rising living costs is the risk of strikes and riots in South Africa. And we are seeing a lot of threats of riots. Here we've got the unions, the various big unions that are saying they want government to increase the wage bill. It has to increase by more than inflation. Now, when you look at the budget, when you look at the fiscal capability of our government, we're already spending less than we're spending more than we're earning. So we're making 1.9 trillion. We're spending 2.2 trillion. Where are we going to find more money to increase the already bloated wage bill of the public servants? Like, it doesn't compute. But I can also understand. I can understand, these blue collar workers who are seeing all of this inflation around them, and they want their wages to increase with inflation. But we just do not have enough taxes. We do not have the revenue as a country to really take this on. So, yeah, the last slide. This shows you the countries experiencing economic protests in 2022, and you can see we're highlighted in orange, which means we have thousands of people that are protesting about the economic inequality that we're currently facing. We're definitely not the worst. I mean, you've got there in Europe, you've got hundreds of thousands, but there is a risk of a bit of social unrest. We saw it, I think it was a year or two ago in KZN, where there was the looting of shopping centres, and I don't think that South Africa's fully recovered from that or ever will, but that is a major risk that we have to be aware of. Okay, so we've spoken about the global economics, we've spoken about the budget speech, we've spoken about some of the high-level risks that are involved in South Africa. There's risks with any business, right? If you don't have the appetite for the risk, then you can't also expect the reward that goes with taking that risk. And the reward in South Africa is pretty good. So, what is happening in the property sector specifically in South Africa? Well, first of all, this is the prime interest rate. So this is what banks are going to lend to us as end consumers. On the top right, you can see 10.75 is what prime is as of the 27th of January. So it hasn't gone up since, but it went up once this year. The repo rate and CPI are also listed there. And basically all of your credit facilities, your car loans, your home loans, your credit cards, your Edgar's account, all of that has been adjusted for this inflation story. Here are the capital appreciation estimates per region. Now I get this data from Lightstone. They give you a monthly report, and essentially you can see that Gauteng is performing quite poorly. The average capital appreciation expected in that area is 2.9. Usually Western Cape is quite high on this list, but they've gone down to only 5.4. So we can see some of the top performers on Northern Cape with a 7% appreciation rate, and Eastern Cape also 7%. And Mpumalanga is doing quite well alongside Limpopo. So there is some attractive growth in the property space. Now our annual inflation rate is 2.7. And then here you can just see the summary that I spoke about, that KZN and Mpumalanga are remaining steady, and there's been a decrease in Eastern Cape, Gauteng, Northwest, Northern Cape, and Western Cape. What does this mean? I think we're heading into a buyer's market. I've been saying that for a while. I just don't know when it's really going to hit. I've been aggressively looking to buy, and I haven't really found the juicy discounts that I was hoping to find. So I don't think we've hit the buyer's market just yet. But we've got increased inflation, we've got increased interest rates, we've got increased cost of living, and we're going to have more and more distressed sellers come into the market and kind of flood the market with supply, and boom, it'll turn into a buyer's market. In terms of where some of the estimates are in terms of what the future holds for the inflation of the property market in South Africa, we've got a high forecast, or an optimistic forecast, heading us to a 3.7% growth. Mild will be 2.3, and then low will be 0.9. I think it comes down again to the Eskom risk and to the risks of South Africa, whether we'll have a optimistic or pessimistic outlook on the future. So that's pretty much my story, and I'm sticking to it. I hope that I haven't come across too negative or doom or gloom, that our country is not a place worth investing. It's definitely a place worth investing, but it does come with its own risks. If this is the first time you're watching any of my content, please click subscribe, join the tribe. I know I put a lot of my face on the thumbnails and maybe it looks a little bit overwhelming, but I promise that my content is good. And I'm somebody who's in the market daily, and I've got some great knowledge to share. And I've also got a market specific or market updates playlist. So every month, I'll be doing one of these videos sharing with you any of the upcoming trends. The next one that I'll be doing in April will be with TPN's vacancy report. So I'll be talking about whether we've got better or worse occupancy than prior years. Until next time, happy investing, enjoy, and take care.